Hi everyone, welcome to Your Money, Your Call. I'm Nina May. Roger, Todd, welcome to the program. Great to have you on tonight on what was a little bit of a disappointing day, you'd have to say. Now, what do you make of it?
Disappointing why?
Well,
because it went down?
Yeah.
But that's good if you're a net buyer, isn't it? If you want to buy stocks, you don't want them to go up. You want them to go down.
This is a good point, but just a blip on the radar, do you think, or a sign of perhaps what we're likely to see a bit more of ahead?
I, as you know, value individual businesses and establish their intrinsic value, and when I aggregate them, I get a number for the All Ords Index, and that number changes regularly. But at the moment, it's about 3,960. Call it 4,000. The market is a good 19% above that. So there's not a lot of bargains at the moment in the market. If it comes back, that doesn't mean it's going to come back, of course. It doesn't mean that it's going to collapse or anything. I'm not predicting where the market's going to go, but it's not cheap.
So let's go to Paul, who's up there. Hi there, Paul. Thanks for dialing in.
Yeah, thanks for listening to me.
And what's your question tonight?
It has been recommended to me that I should buy some shares in a company called Biotech. And from what I can glean, it's a pharmaceutical type or manufacturing or something, but I wonder if the boys have any ideas about it as a good value share.
They might not about this particular company, but they might be able to give us some analysis about pharmaceuticals in general. Roger, your thoughts?
Yeah, look, it's interesting, most of the healthcare sector stocks are really expensive, and they have been for a long time. There's a good reason for that. One of the reasons is that there's a demographic avalanche. There's a generational tidal wave, if you like, of baby boomers who are going to need better health care, and so there seems to be, in terms of a thematic, you better buy these companies because they're going to make a lot more money in the future. This particular company I know very little about. If it's speculative, if it doesn't make a profit, I can't value it. So I don't know enough about this particular company. But my take on the entire sector is that it's very, very expensive. A lot of things that have revolutionised the world, and people have still lost a ton of money. And there seems to be a lot of speculation about which product. You don't know if it'll pass all the testing, if it has, if it's a company that's got something in various stages of trial. Once it's gone through all those trials, you don't know what the competition is going to be putting out and what the competitive landscape looks like. And you don't know how much they're going to sell the product for, and whether or not there's going to be a completely different solution that arrives. So you have to speculate about a lot of things to get it right. I think when people buy shares in speculative companies, often what they're doing is they're punting on the share price going up rather than thinking about whether or not the business is a good business. And there's a distinction there that you need to think about.
Yeah, some interesting thoughts there. Thanks so much for your call, Paul. Let's go to Sydney now. We've got David on the line. Hi, David.
Hi, g'day. How are you today?
Hi, very well. What's your question?
I'd just like to. I got one of these big tips from somebody the other day. A broker told me to get into a company called Sundance Resources. I wonder if any of your learned people on the panel have ever heard of Sundance. Apparently, they've got some sort of something in mining in Africa or something. And what does any of your people on the board have heard of this stock?
Is there anything to add on that one?
I never like to lose money, so I have no money I can afford to lose.
That's
None.
the quote of the night, that one.
I like those.
That'll make the highlights package. Ben from Brisbane, our next caller. Hi, Ben.
Hi, Nina. Love the show.
Thank you.
I'd just like to mention this one before, Bioprospect. They've got that natural termite, non-toxic termite treatment coming up. They're in the third stages of it now for commercialisation next October. They've busted up to 3 cents today. I was just wondering if anyone's got any knowledge on what's behind that. Thanks.
Did you call a few weeks ago about the same stock?
Yes.
Yeah, okay. I remember that. I haven't researched it. Again, what can you tell me about it since the last time you called?
They bought a
other than it's gone up.
Stock in China with emu oil, it's the basis of it. So.
Yeah, okay. And they're not. Are they making any money at the moment?
They will be. They're expecting sales from the skincare products at Christmas. So. For the Christmas sales. So.
Have they given any indication as to what that quantum might be?
no, I don't know yet. But
Okay.
it jumped up a cent today. I was just wondering if you got any ideas.
Well, look, if it was on decent volume, if there was some decent volume, then it probably pays to investigate precisely what's going on. It could be that there might have just been a transfer of a large line of stock. If there is a lot of volume and that's why it's turned over. It could be that someone that people respect has bought shares in the company. I don't know, and I haven't had a look at it. But what I'd ask you to do is to try and forecast out, maybe 5 or 10 years, and it's really, pie in the sky stuff, but what is the amount of money they could potentially make? And then ask yourself, based on the equity that's in the business now, how much they've invested, do they need any more equity? Do they need any more capital to be injected into that business to get that profit? And if you can work those two things out, you'll get a sense of the return on equity. And if it is above 20% or 30% and likely to be sustained because they have some identifiable competitive advantage, then you could be onto something worth a lot more than where it's trading now. But if you can't answer those questions, then you're really just sort of flying blind and guessing. And I just really caution you about whether or not that's a smart thing to do.
So, Ben, a bit more research to be done there, I think. Let's go now to Alex from Blacktown. Hi, Alex.
How's it going? I just want to know thoughts. I own Woodside for the longer term, but the oil sector generally, are we heading to a new oil crisis? Because what seems to be happening is all these countries are getting out of recessions, and as oil demand picks up, which the Arabs say they would, and demand will pick up to 100 million barrels in 2 to 3 years' time per day, and we've got to find another 20-30 million barrels of oil to find that, and no one's drilling, no one's finding oil. There is oil, but it's going to cost a lot of money to bring this oil out of the ground and into the markets, and it's going to be a tight market in 2 to 3 years' time.
What are your thoughts on this, Roger?
Well, you remember the last time I was on the show with you that I thought Woodside was a better company than Santos,
yes,
and I maintain that view. I do subscribe, however, to the idea that we've got an oil supply problem long term. Again, I don't know what the quantum is. That's not my area of expertise, but the global financial crisis continues to make it difficult to borrow money or raise capital for oil exploration. There is less oil being explored for, let alone found, than there was 2 years ago and 3 years ago. I suspect that will continue, and because no new large oil fields are being discovered, well, not cheap oil anyway, then the era of cheap oil is over. And I really think, I don't know whether there's going to be a technical solution or some sort of technology that's going to replace oil. My understanding is there's nothing on the horizon that's going to be quickly able to replace it, and so we're going to have, in my view, an oil crisis. Now, I might be completely wrong, but I'm willing to bet my money on the idea that the oil price will go higher over the next 5 or 10 years.
And we know you don't like to lose your money either.
I don't like losing money.
Okay. What about the impact of that on energy stocks, though, when people are considering the weighting of their portfolio? Yeah,
let me say this. When you have a view about a commodity, and I do have a view about oil, I personally prefer to take a position in the commodity itself, simply because I've got a view about the commodity. Once you start bringing in management decisions, boards, debt financing, equity markets, whether they find oil or not, suddenly you've got a whole lot of risks that don't relate to the oil price. And what can happen is you can actually believe the oil price is going up, buy into an oil stock, the oil price does go up, but the oil stock doesn't because it's gone broke or whatever the circumstances are. So I prefer to take exposure to the actual commodity.